Hello, everyone. Again, welcome back after your first coffee break of the conference. Hope you're feeling, I guess, awake and refreshed. Did you know that coffee and tea are not the only natural sources of caffeine? In fact, there is, I think, 60 more species of plants that do have some naturally. You got plenty of alternatives if you want to be awake over the next couple of days. I'm thinking about cacao, guarana berries. So no, you have plenty. Why am I telling you all these, other than stalling a bit? We love having alternatives. In investments, having alternatives means very often having an edge, having value on top of your usual investors. And today we have Weili Zhou, Head of Quant Equity at Robeco, who's going to tell us a bit more about how to take advantage of alternative data in the investment world to reach new investment heights. So please welcome Weili Zhou.
Well, thank you, everyone. It's really a great pleasure and honor to be part of the Momentum Think Tank Conference this year. So today, I would like to share some insights from Robeco regarding how we innovate and how we achieve and reach investment heights for clients. Data, computing, advanced algorithms, these are buzzwords and actual things, really bringing tremendous change in all aspects of our lives. And also including the way we invest. And these are also the advances that have already enabled what we call next-gen quant investing. So today in this particular talk, I would like to cover 3 areas of next-gen quant investing that have already made their way into our clients' portfolios, and actually with the promises of many more to come. So the 3 topics are alternative data, machine learning, and NLP, the natural language processing, followed by conclusion and Q&A parts. And before we dive in, I hope that we could have very quickly the time to look at 2 slides that sets the context of this talk. Now, the first context slide is this one. There are 3 major secular trends that we see are transforming the world we are in. I think it's also pretty much related to the content from the previous presenter. So firstly, we see the explosion of data. Nowadays, in every 2 years, the amount of data that are generated, actually, it's equal to all that have been generated previously in human history. So when we look at, right, one investment decision nowadays, the availability and the dimensionality of the information sets that is available, that is overwhelming. And in a way, you can say this is a blessing, but maybe also a curse. Well, luckily, we have the second trend, which is the explosion of computing power. According to the law of accelerating return, which is also known as the Moore's law, the computing power doubles approximately every 2 years. So the number of transistors on microchips, that doubles. So this is pretty much the case in the last 50 years. And we're also glad to see the access to computing power is also easier nowadays, thanks to the great stuff like the cloud technology. Well, lastly, I would say we are also experiencing a galloping space in AI industry, thanks to the first 2 trends. More data, there's more computing power. Tech firms like Google, OpenAI, they're really pushing the frontier of the state-of-art AI algorithms. And this is fantastic news for our quants, because we have the domain knowledge and we know really how to combine it with these state-of-art AI and lead to better results for our clients. So all these things put together, data, computing, and algorithm, it is very clear they've brought us to the new era, whether we like it or not. They've also increased the competition level, but also offered new and unique insights. And this is the second context slide here. So it is about AI. What do we mean when we actually, talk about AI nowadays? So AI is actually a very generic and catch-all term. right? Underneath, there are specific technologies actually being developed for more than 70 years. So it's not really a new thing. And if we look at AI, we have the machine learning part. So machine learning, they identify and they predict patterns in data. So if you think about it, actually maybe you don't know, but linear regression is also a form of machine learning. But nowadays, if we refer to machine learning, very often we talk about more sophisticated models, nonlinear models, right? Like a random forest, gradient boosts. So this is, I would say, a big part. And within machine learning, we also have the deep learning. And when we talk about deep learning, usually we refer to the neural network models with more than one layers. So these are also the more dominant form of machine learning models that are prevailing nowadays. And next to machine learning, we also have NLP. That's the natural language processing algorithm. They analyze, they read the text data. And actually, if you think about it, it's very useful because much of the financial information, they're not per se numerical, right? A lot of the information are textual or audio. So think of the speeches that C-levels are given. Think of the news, think of the analyst reports. These are all the information that could be very well handled by natural language processing. Well, in the end, we also see in the middle this LLM, which is large language model. Some also refer to the generative models. This is where the neural network and a very advanced deep learning technique being applied to the NLP tasks. So if you look at how exactly it does, for example, the specific and unique skill it has is to look at a joint probability rather than conditional probability. You ask a generative AI app to draw a boat. You see the boat on water. Because for the data it's trained on, it knows that whenever there is boat, water must be nearby. So this is what the large language model and the generative models giving us. Now that we've set the context, I want to move on to the first topic, which is alternative data. So when we talk about alternative data, I think it's good to show how big the change has been in the past 10 years. This is a graph that's more or less summarized the landscape of alternative data, the infrastructure, the platform providers back in 2012. So that's 10 years ago. I think quite a lot of familiar names are coming back and logos. I think, yeah, it's also clear that it was already very busy, right? And now very, I would say, comprehensive. And if we move forward, and we see this is the picture in 2021. So I think it's even, you don't even need to bother looking at the exact logos and names. It's just very, very difficult. I think what the message we want to illustrate here is that the complexity and the pace of alternative data that's been developing in the past decade is just amazing. And what do we mean exactly by alternative data? Right? What do we mean by alternative? So I think first let's define what's traditional data. Now, traditional data is often related to financial statement, right? To the leverage ratio, the profitability information that we can find back. Also, the market data, price, return, volatility. These are the traditional information we make good use of. While alternative data, that's anything that is non-traditional. It can be the credit card transaction. It can be the satellite map image. It can be the Twitters, and it can be customer reviews, all these kind of informations. And it's usually categorized by 4 V's, right? Volume, huge volume, a lot of them. Velocity, right? Came in very quickly, can be any moment, real time. Variety, different forms, unstructured, text, audio, video, pictures, you name it. And veracity, so most of the things maybe are true, but there are also noises. So you need to be very careful when you look at what alternative data set is bringing us. And I would say that from our user experience, we do see alternative data bringing us different dimensions and different angles of insights that help us to understand the world, understand the companies better. And it does also tend to be more up-to-date, more forward-looking. So if, let's say, the quant work is to do nowcasting or forecasting, I have to say that alternative data really help us to do our job better. Now, here is a concrete example of the alternative data that we look at and being researched by team. So this is the penalty and fine that's going to levied on companies by government agencies. And we also find there are NGOs really closely monitor and collect these kind of information. If you think of fines and penalties, right, these represent legal transgression. So it's saying that whether it's doing fine or not legally. But at the same time, if you think of these information, actually what it brings you is the quality of management, the healthiness of the culture. So actually it can tell you a lot of information about well-being of a company. And what we also looked at is not only the size of the ticket, let's say how big the fine is or how big the violation is, we also look at the frequency, or in other words, autocorrelation. Let's say, is a company a serious offender of rules and regulations? And what we found from our research is that, the performance, long-term performance of a company that tend to be a serial offender will be worse compared to the non-offender. So there is always the pattern in it. And this is also one of the type of alternative data we use. Now here is the second example of alternative data that has been researched, but also deployed in a strategy. And it's China specific. I heard the Chinification, but this is also special attention for China. Why? Because the stock market in China is unique in the sense that it's relatively new, it's not with a very long history, but at the same time, it has unique regulatory setup. And if you look at the nature, it's also a bit more closed, right? It also have a lot more domestic investors, particularly the retail investors. So the government actually, back in the 2000s, they already put a law in place and saying that for institutional investors, if you're interested in a company and if you're paying visit in a listed company, that needs to be documented and that needs to be disclosed. Because the institutional interest, right, facing, 70, 80% of the retail investors in the market, and institutional interests in a company could be very, very material. And so these kind of information of on-site visit, management meetings of listed companies in Shanghai and Shenzhen, these information actually you can get it from the regulator. And this also really indicates, right, what kind of companies, what kind of industries are gathering attention from investors, large investors. So we do have this kind of signals not only for stock selection, but also industry timing. So for example, if a lot of visits happened in the, I would say, biotech industry, well, that says something about the popularity and I would say sentiment around this industry. So these are just two examples of alternative data that we make use, but actually there are many more that we already deploy and implemented in our production. So for example, scraping the job postings on companies and getting an early feel of whether the business is doing right or not. These are all very, very useful. But I think it's also good to signal, right? Given the alternative nature of these kind of data, it is crucial to be extra careful and to be extra cautious with the quality. And it is not that, I see something with very good test results in a very peculiar context, and this is, yes, good to go into your model. And it's really important to consult with the fundamental team or experts and double check and validate the history of the data. Because there is all kinds of purposes, right, of data vendors to manipulate it, to tune the history in such a way that it gives the alpha, good alpha in your backtest. So we need to be extremely cautious in this regard. And next, I would like to move to machine learning, how we look at that's a very powerful tool in extracting alpha for our investment strategy. What is machine learning? I think in general term, it says machine learning algorithm that improve automatically and through experience and by the use of data. I think it's a very general description. So from a quant researcher, so I've done quant research, I would say, for more than 17 years. So what I have seen is that by the deploying of machine learning, really the relationship between data, outputs, and human researcher is changing. Because in the traditional context, right, so me as a researcher, I have a pre-selected model. I have assumption of what the relationship, best relationship is between the input and output, and I test it on the ground. And then if it's not close enough to the target, I would tune something, and then I'll put it on the run again. While this is different in the machine learning era, because my role will change from instructor to orchestrator, right? I will specify this is the input I would use, and this is the target I want to predict. And machine, you tell me what is the best relationship description between these two things. And then we do not assume or too much pre-specify, let's say, what is the functional form and what should be the best definition and which model should be the best description of the relationship. And let model, let's say, recursively find itself via different scenarios, via different parameters, via the cross-validation checks, and come to me with the conclusion. So in that regard, I would say it already puts down a very distinct advantage of machine learning, which is the efficiency gain, right? It is identifying features' importance by itself, and it's correcting itself by looking at all these measures. And a second benefit, I would say, and it's I think most important for quant investor, is that machine learning gives very good insights into the nonlinear relationship and interactive relationship. So human tends to think in a linear way. This is good, this is bad, stock return go up, stock return go down, right? This is very straightforward. Okay, we can incorporate certain degree of nonlinearity in our assumption and imagination, but there's limitation. While model and the machine, they don't have this constraint. They can test all kinds of nonlinear relationships and then come up to the insight that it is beyond the original assumption of researchers. And they can also very nicely find the interdependency between variables or signals. So a factor A would be only useful if factor B is turned on. Well, I think this is a very, I would say, insightful, and it's also not straightforward for human to depict. And the third advantage is that it's very forward-looking. So there are all kinds of ways in machine learning experiments that can, prevent overfitting and making sure that really the selected model and functional form has the best out-of-sample track record before you really deploy it in production. And it changes over time. So if one signal was very important back 30 years ago, but importance and information has just got consumed completely over the last 30 years, it will not show up in the machine learning specification. Now, having said that, here is a concrete example what kind of interactive relationship that machine could provide us with. And this is also an example of how the classic signals or quant signal could be enhanced to a higher level thanks to machine learning. So as we probably all know, that price reversal is a very well-known anomaly in the stock markets, particularly predicting the cross-section of stock returns. Because if you look at the recent performance of stocks in the cross-section, right, those who have experienced the biggest jump or biggest drop, actually the price tend to revert. Because in most of the times there is liquidity pressure and pushing back the stock price back to their normal expectation. Now, however, if you think, hey, about the reality, there are always a lot of news going on with stocks. Some more, some less. Some more than it normally has. And if there are a lot of news going on with a stock, then we could logically expect that the changes in stock prices are very well grounded or substantiated, right? So if there's downgrade news about a company in terms of credit rating, we would logically expect it not revert after the price drop. So we did this checkup, and then machine showed us. So on average, right, we see a performance spread between the past winners and the losers about 16% on annual basis. However, if we double sort and if we interact this with the amount of news that are available around the stocks, and then we clearly could see that for those stocks that have little news around the extreme price movement, their reversal is dramatic, and the spread could be doubled to about 30% between the top and bottom groups. Well, if we look at the stocks that have a lot of news and really big things going on, the reversal hardly happen. So for a very well-known effect, a quant anomaly, by having machine learning detecting interactions between reversal, past performance, and the news volume, we could already extract the alpha in this context. So this is a second example of how machine learning could bring us into the new insights that is not easily available. Now, thirdly, I want to move to NLP. The natural language process is also kind of algorithm, and it's also very much related to alternative data given the input. So these are algorithms, right? Reads and analyzes spoken or written text or words. And underlying, actually, there are different types of NLP algorithm. Some NLP are good at looking at the sentiment, happy or not, positive or negative. Some NLP technique look at, for example, how evasive are you, how concrete are you in your message. This is particularly useful and when we are looking at the CEOs and CIOs talking, right? And there are also as NLP looking at the topic modeling. So what is the trendy next big thing in the news and in industry? But before all these algorithms could be turned on, there are common steps needs to be taken to make it into that stage. Now, firstly, the gathering and the cleaning part. Cleaning the text data, corpus in NLP speak. And then we have a lot of sentences. What we need to do is to chop these sentences into words, into short phrases. And then we can translate these words and phrases into mathematical factors. So for example, you can chop sentence in Paris, France, Germany, Berlin, and then you know, hey, the mathematical relationship is that if Paris minus France plus Germany, and we'll have Berlin, right? So this is how I would say machine translate text into mathematical relationship, or king minus man plus woman, that's queen. So this is how I would say machine and text, let's say, transform into text. And then once these factors are made, this is the point where we can start all these algorithm tests. Sentiment, very important, because a lot of the news, executive communications, when we run the NLP algorithm here, we look at, is it a positive news or is it some negative message? And one step further, how positive and how negative. So we can even put a degree of magnitude to it. Secondly is the zero shots classification. What is this message about and what is this message not about, right? Is it about a new product or not? Is it about, how we say, earning a price or not? So this is the classification case. And third case is also very interesting. It looks at the similarity. So similarity can happen in two ways. One is like look at a description of business. How close are they? How related these two companies are? And the second is that look at the Q&A. You know, how good is the answer in answering the question? Is it beating around the bushes or is it really two straight points being raised by this question? So these are, I would say, concrete examples. But how to translate into alpha performance? So here is one example looking at the sentence similarity. And this helps us to reclassify stocks into different groups than the standard classification, right? We all use gigs, right? We look at 11 sectors. According to those classification, then you have Netflix separate from Apple, from Amazon. It's all in different sectors. And we all know that similar stocks tend to move in the same way, right? But these are different sectors. Are they moving the same way? Yes, we think so. And quite often we see that's the case. But how do we see the linkage between them? if you look at the description of their business, if you look at the communication of executives, actually there's a lot of similarity in the sentences. And so where is their growth focus? Where are they invested in a cloud technique? And then you can remap the group of stocks by looking at the business they are in, the communication they are in, and the description. So on the right-hand side, you see this new network. We call it the RICS, Robeco Industry Classification System, instead of GICS. And there we see, right, Apple, apart from Cisco, right, which is in the same sector, actually it's also very closely related to Amazon, to Facebook, or Meta, sorry, nowadays. You can see this is not a new invention, right? IBM or NVIDIA even, because of the business relevance and I think maybe the common AI exposure here. So this is really triggering us to rethink, hey, when we look at the industry momentum signal, right? One group does well, the rest will follow from the same group. Should we look at this alternative group? Or when we look at the risk management of our portfolio, instead of the sector limit of 1, 2, 3, 5%, should we look at the group limit instead? So this is, I think, an actual research we've been doing. Or the other example I want to put down here is the value of earnings call that could be extracted by NLP technique. This is also a signal that we deploy in our strategy. So I think earning call transcript, there's probably a very common topic and idea being spun around for a while. We've also been looking at earning call transcript for a long time. At the beginning, we focused mainly on the executive communication, right? So we think of, hey, what was the script parts told by CEO, CFO? Well, interesting thing is we saw that these executives, they're learning. They're learning very well and knowing what kind of words and buzzwords and the positive words were better received by analysts or by machine on the other side. So you see very interestingly that the average sentiment score of the executive communication for the script part is really improving over time. Now, however, if we focus, change it a little bit, and we focus on the Q&A part, which is unscripted parts by analysts, and then the like freestyle conversation between analysts and a company, and there we found really the value is much bigger. So if you look at the alpha, let's say, in the top and bottom group, suggested by the Q&A from the company's answer, or the Q&A part from analysts, mostly the questions, and there we do see that the sentiment score, right, being a very strong alpha indicator. And you see even more from the question parts from analysts than from company. So sometimes a question is an answer itself. Like, do you have a severe solvency problem, right? So that kind of question is already kind of alluding to what the company is probably experiencing. And we also take it one step further, because here we show the value added of using different language-based NLP technique to add on top of each other. So when we look at, again, the Chinese companies, right? So you can do the Chinese NLP and to see what the signal is and sentiment is. You can also use the English translation and then apply an English NLP on top of it, because it's the trained data and the nuances is just different. And what we have found is that they are not identical. The outcomes are not the same. While they seem to contain orthogonal information on each other, and while combined, it seems to give us better outcome. And this is also a quite nice development that we're doing, because, emerging market is a very big investment universe for all of us. So having said all that, this brings me to the final conclusion. I think, no matter we like it or not, AI and the new technology, alternative data is there. It is not like on the way, it's already something that we live and breathe on a daily basis. It really has lower and lower barrier nowadays. So if you have access to OpenAI, or if you have some connection, right, you can already deploy it quite easily. But I think as professional investors, am I worried? Yes and no. Because at the end of the day, I think these toolkits, they're still used by humans, used by people with a lot of domain knowledge. And we are training these AIs and data to serve the purpose and to give us the new insights. So I think in today's world, when these toolkits are so popular and so accessible to everyone, having the right investment knowledge and insights, and always ask yourself the question, critical question, does it make sense? Can you explain to yourself? Can you put your own money in it? I think it makes you look at the game and look at investment from a different perspective. And of course, we are very happy that many partners of ours and clients of ours are in this journey together. So we are also having a lot of conversations and being challenged on a daily basis. But that's fun part of the work we have as a quant, so to say.